Okay, thank you so much for your time, Digant. We're heading into the market opening, so we'll come back to you later. But for now, here's the first tick on the index. Absolutely quiet for the Nifty, up just about 4 odd points. The mid-cap index is up about 70 odd points. So a flat opening, but now trending into the red for the Bank Nifty, down about 3 points, but nothing alarming really. Suffice to say, it's an absolutely flat opening. What's happening with the gainers? Let's take a look at that first. ICICI Bank, ahead of its numbers on Saturday, is up almost 0.7%. You have Dr. Reddy's, that's in the green, up 0.6%. Divi's Lab. So a lot of these pharma names are doing well. Bajaj Finserv is trending in the green now, up almost 0.5%. LTI Mindtree is also up about 0.3%. And Sun Pharma is up about 0.2%. So these are the list of gainers. On the losing end, it's IT, HCL Tech, Infosys are in the red right now. A tad bit really. TCS as well, trending lower. And something like a Hero MotoCorp from the auto space down about 0.5%. Apollo Hospitals, Axis Bank just trending in the red at the moment. Nothing alarming. But for now, very quiet for the headline index. It's the mid-cap index that's starting to surge now. So L&T Finance Holdings is one of the big movers, 3% higher on that. Reliance Industries, by the way, let's just see where that rate is settling as of now. Reliance Industries will come up for you on your screen in a bit. We'll get to that. But for now, very, very quiet for the Nifty, absolutely flat. The mid-cap index is doing a better job, actually, up almost about 65 odd points. Canfin Homes, despite the, NII profits being above estimates, Canfin Homes is sulking just a tad bit, but there's plenty of action in the broader
Well, that's
market.
right. Canfin Homes went into these earnings with a gain of 2.5%, so it's giving some part of that. But as Sonia mentioned, those numbers are quite good. What's losing out today is Shree Cement. They've got a letter from the Ministry of Corporate Affairs. Remember, our team had told you that this was likely to happen. And now they've confirmed that. So the stock did take a bit of a downtick. And now, in fact, it's reacting to this news flow overnight. So it's down close to 2.5%. We'll be waiting to see what's the outcome of that income tax survey that was conducted on the company. Amara Raja as well is down close to around 1% to kickstart things. What's doing well? L&T Finance Holdings, those numbers look quite good. The stock is up close to around 1.5%. Yeah, Federal Bank, well, they've gone ahead with their fundraising plans and they've raised their required capital. Stock opens up with a gain of close to 100%. Concord, earlier the exchange said that it will be excluded from the F&O trading. Now they're saying they're reversing that decision, so it'll continue to trade in F&O. So that stock's up close to around 1% odd. Union Bank, I'm not sure what's going on there, but that stock is building on volumes, and that's up close to around 3%. For the time being, the Nifty is down close to around 20 points, but you need to keep in mind that the star performer for the last few days has been Reliance Industries. So in that sense, the star batsman is not participating for the first time. We'll get a better rate at around 9:45 to around 10 a.m. odd. Prashant.
Okay, well, market breadth is pretty strong. It's just, 2 minutes of the market, and things are looking quite good. 2:1. Over 2:1 is what the advanced decline ratio is now at. Just a few names. Look at something like straight off the bat. I mean, this is not the first stock that I would mention when we start to address open, but Premier Explosives. There's been an explosion higher on Premier Explosives. Day before yesterday, it saw a bit of a profit taking, but just a one-way move. Yesterday, I think, was up 10%. Today, it starts about 4% higher. And it's got volumes, and that's why I'm kind of mentioning it right off. Look at Titagarh. Titagarh had a big day yesterday. Vivek highlighted that HSBC note on Titagarh. Stocks up another 5% this morning, 622, 623. Again, a one-way kind of move. There is TV18 Broadcast, which was up 10% yesterday. It's up another 2% this morning. Again, it's got volumes. We've got Newgen, which reported numbers during market hours yesterday, 4.5% on top of the gains that we saw in trade, yesterday. We got PNC Infra, which is a contractor basically, 7% on PNC Infra, 368 on volumes at this point in the day. So this is quite something. KCP Sugar Industries, I mean, keep an eye on this one. It's up 16%. I mean, it's a small stock, $30, but volumes are not bad for this time as far as the open is concerned. I'll just take a quick look at stuff on the downside. I think Shree we mentioned, Amara Raja we mentioned. Amara Raja has got volumes. It's down 1.25%. There was a big block which happened. Paytm starts slightly lower. I don't know, something has happened on Krishna Diagnostic.
Yes, yeah.
That's down 13%. It's got volumes as well, 464 on Krishna Diagnostics. It'll come up on your screen.
Okay, I think Krishna Diagnostics.
That's Krishna Medical. Krishna Diagnostics is the one that I'm talking about. and that is down 13%. Yeah, there you go. Big volumes.
The National Health Mission of Rajasthan has cancelled one letter of acceptance for providing laboratory services for Krishna Diagnostics. So that is down about 13%. The other one that's getting a big knock is transformers and rectifiers. So now down almost 16% on that. It's got a stop deal notice from GETCO, which is the Gujarat Energy Transmission Corporation. They don't want to deal with the company for a period of 3 years. There are some allegations made. So that's down almost 18%, not looking good at the moment. So these are two stocks that are seeing some double-digit losses. Otherwise, for the market overall, I mean, it's now actually starting to trend in the red. So 40 points lower for the Nifty now.
And with 49 stocks trading.
Right?
Yeah. The star batsman's not yet there.
Is not in, and that'll join the crease at 10 o'clock, 10 this morning. Let's actually take a quick look at where where Reliance is at in its own price discovery session for a quick bit, and then we'll move on. Well, it's down 4.6, so 130 rupee difference. 27.07. No, there's still time. We're still in the first half of this price discovery session for Reliance x Jio Financial Services. Tata Communication is up 1.5%. Started in the red. Numbers are in line to slightly subdued, but the stock's now recovered. It's up 1.5 at about 16.40 or so. Ashwini Agarwal is with us, founder and partner at Demeter Advisors. Ashwini, good to have you with us here. Thank you very much for your time. Let's just start with what you make of Jio Financial Services. We had an analyst earlier with us who was saying, well, it'll take time, and it's not going to. The impact on the rest of the listed universe is not going to be immediate. But how are you thinking about this event?
Prashant, the way I think about it is that, your previous guest, his comments were quite astute in the sense that the lending business is the key to Jio Financial Services. And my sense is that there's a huge opportunity there in terms of how large the the below prime market is. I wouldn't call it subprime, that has a negative connotation, but the entire mass of borrowers which are just below the prime borrowers. And we've seen a lot of these small finance banks and home finance companies. You spoke earlier about Canfin Homes results. You look at a lot of lenders, and the borrowing ability and the opportunity to borrow for the middle class, for small and medium-sized borrowers in India is still quite large, and it's reasonably underserved, at least in the near term. So if Jio Financial Services can make a go of that, it will be good. And I'm not sure if in the near term it has a very large competitive impact on the industry, because I think the market is large enough for everyone. Having said that, for some of the larger players, obviously it's a moment to reflect and see, because there is a large competitor that has emerged, and they will be looking to see what they do. So I think interesting times, but I wouldn't be too worried in the near term.
Okay, not too worried in the near term for a player like Bajaj Finance, but definitely wait and watch mode as a big player enters the market, right? The financial services space. Got that. By the way, just a couple of more stocks. Polycab continues to hit new highs, so it's once again up about 1.5%. And this entire theme, the home improvement theme, whether it's cables and wires or even ceramics, have been doing very well. So Kajaria Ceramics, for example, is at a fresh 52-week high this morning, up 3.5%, and that stock is up 30% this year already. Ashwini, hi, good morning, and thanks for joining in.
Morning.
How are you feeling about the market at this juncture? Do you think that this is just the start of a multi-year upcycle for the Indian markets, or do you think that a lot of the good news is already in the price?
Surya, it's a great question, because we've at least in the 32 years that I've been here in the markets, I have not seen a confluence of positive factors like what we are seeing now. It does feel that we are in for a multi-year economic expansion cycle. Now, has the market significantly discounted a lot of the positives in the near term? That's possible. But if investors are willing to look out 2 years, 3 years, 5 years, I think there is more upside than downside. So, even if you look back at the cycle that we had between 2003 to 2007, each year we saw corrections which were somewhere in the region of 10% to 20% at the index level. So, these kind of cuts can happen, and these can come from global developments. It can come from local developments, which have nothing to do with the economy. These could be politics. It could be, something else that we can't predict. But the point that I'm trying to make is that it's going to be a positive outlook for the economy for the next 3 to 5 years, and investors would do well to just stay invested and ride out the volatility that is inherent to stock markets.
All right. Hi, Mr. Agarwal. Good morning. What's your view on IT? The numbers were pretty much in line. Some of them were misses, actually, but clearly not as bad as what the street was estimating. Now, there are still challenges going ahead, going by the global headwinds that could lie ahead in FY24. Is this bounce providing a good opportunity actually to lighten your position over here? Or do you think that you would continue to hold positions or maybe make a fresh entry as well into IT stocks?
Nigel, great question. I've been quite flummoxed by the kind of strength that we've seen in the IT names, especially after the disappointments from all the majors. I was sniffing at this sector, as I'd mentioned in our earlier conversations, between April and June, but decided to stay away, thinking that, the June results might offer an opportunity because I expected them to be weak. So they were weak, as we saw. But the issue seems to be that the US narrative has now changed to one of a soft landing, and rates trajectory that to, one and done, which is obviously providing some tailwind to the IT sector. In addition to that, foreign investment flows is what's driving the market, and relative valuations being attractive, relative underperformance being in place, and relatively high familiarity for IT names for large foreign investors is the reason why these stocks have done so well. Having said that, the mid caps actually are doing all right. I mean, a couple of the mid cap names that reported yesterday have actually done quite well. So, the narrative that we saw over the last quarter, where the mid caps actually didn't correct as much as the large caps, seems to tell a story that the mid caps are actually doing quite well. But in the large cap space, honestly, the rally flummoxes me. I was hoping to purchase IT large caps into the correction that I had expected post the results, but that hasn't happened, so I'll stay out for now.
Ashwini, slightly open-ended question in terms of how your view has evolved for newer opportunities where one can put in fresh money.
Prashant, nothing very different. I continue to be fairly positive about the financials and the banks, which has been a big consensus trade, but I'd like to move down the market cap curve there, because I think the overall environment is quite benign. So that's one place where I'm looking for opportunities. The other place is in the whole mid and small cap space, where I think the valuations are still quite reasonable. Yes, you have pockets of exuberance and valuations being stretched, but there are a lot of places where I still find valuations in the early teens, return on capital employed, in mid-teens or high teens, and a pretty decent growth outlook over the next 3 to 5 years. So, mid and small continue to be very attractive, notwithstanding the kind of outperformance that we've seen over the last one quarter or so at the index level, and some really stellar stock market returns from individual stock prices. So that's one area that I'm continuing to sniff at. But also, among the large banks, which have significantly underperformed, my sense is that, for those that are feeling slightly jittery and, don't want to adventure into the small and mid cap space, I think the large banks also offer an opportunity where you can make a 15% compounded return over the next 3 years, from here, which is not a bad return if you think about it. Not making any aggressive assumptions on valuation expansion, just trying to capture the earnings growth. So, there are a lot of places to pick and choose. Very, very interesting market to be in.
Okay, all right. Mr. Agarwal, thanks so much for stopping by and giving us a view on the markets. Look forward to having a chat with you soon. But for the time being, wishing you a good day ahead. Well, let's move on then and let's get our first corporate on the show. Hatsun Agro, well, those numbers look quite good. Operationally, at least, in the first quarter, the gross margins improved while other expenditure was lower. That's what helped the EBITDA number. Mr. Chandra Mugan, Chairman of Hatsun Agro Products, joins us on the show. Hi, sir. Good morning. Well, you've grown by mid-single digits for the past quarter. Could you break it up for us between volumes as well as pricing? How did both of them fare? And also earlier, you had told us that for the year, you're looking at double-digit revenue growth. Is that still on the cards for FY24?
See, this particular quarter, compared to the earlier year, same quarter, we had shortage of milk. So we have curtailed our business on the commodity where we sell. Almost 200 crores turnover that was possible, we couldn't do it. And we focused on consumer businesses and we left out commodity. Hence, the revenue has been less. We should have done 200 crores more subject to availability of milk. And last year, completely, there was a crisis of availability of milk. So we focused on this. Going forward, the milk situation is improving this quarter. And I believe things will start improving. But again, commodity business may take little more time for us to get it. We may get into double digit with difficulty.
Double-digit growth for the year is something that you continue to maintain, right?
That's right.
All right. And also, could you tell us, just since we're focusing on the top line, what was the contribution coming in from the ice cream business?
No, it is all businesses have contributed. It's not anything singular that has contributed.
No, we wanted to know, sir, the contribution particularly from the ice cream business, because I think that has a little better margins.
It is not the case. Actually, the ice cream, curd, both are doing extremely well. And milk is also doing well. It is not that any specific business has given return. It has been a general performance. Even milk has been good. No issue for us. Only we suffered is on the commodity, not on anything else.
Okay. Mr. Chandramugan, good morning and thanks for joining in. Can you tell me exactly what was the volume growth in the quarter gone by in Q1 and what was the price growth that you saw? And on volumes, particularly by the end of FY24, what are you targeting?
See, volume has grown in all the branded segment, but in the commodity we have lost out. Going forward, 24th, double-digit growth will be automatically coming in this quarter itself. And third, fourth quarter, we expect the double-digit growth to be little better because we may again get into commodity with excess milk. Right now, the milk supply is better than last year milk supply. This is the situation.
Okay, so when you say double-digit growth, are you talking about high teens, low teens, if you can give us any indication? And also on the margin front, what are you targeting? Do you think 12 to 13% margins is something that you can do?
Right now, we have just come out of all the turbulence and let me settle down before committing any margin. But we are sure that this margin, whatever we are maintaining, it can only be better and not less as such.
Got that. Sir, could you talk to us a little bit about the non-South geographies and how they've been doing, a little bit about distribution, any new markets you've gotten into?
See, earlier probably Tamil Nadu used to be about 65% to 70% of our business. Last 4 years, gradually it has been coming down. And right now we can say that Tamil Nadu contributes 50% and the rest of the 50% comes from other states where we have entered earlier. Gradually, the volumes are picking up. And today, in the South geography, we are actually having 50% from Tamil Nadu, rest of it is coming from rest of Tamil Nadu and Maharashtra.
Okay, all right. When you joined us the last time around, we had asked you with the kind of investments you have made. Your fixed assets has continuously been increasing over the last few years. The growth, it braces you up for good growth in the coming years. You said 10,000 crores is possible in terms of revenues. By when will you hit that mark?
I don't want to indicate any time frame and get into that. And we are gradually going on and we are confident that 10,000, we have capacity almost, except for the balancing machines. We don't know when COVID will attack or some other economical recession. We are going on the right.
At current reckoning, sir, with the current setup, if there is something untoward that comes about, then obviously we'll have to, reassess it. But do you think that this year you're going to grow in double digits? You're very certain about that?
This year we will grow definitely in double digit.
You're right. So do you think by FY25 we should see that 10,000 crore mark in terms of revenues?
I don't want to commit anything on that type of rate.
Okay. So, you also have a debt of almost 1,500 crores on your books as of March. You've, I think, gotten approval to sell one of your assets, the sale of the windmills of the company for a consideration of 135 crores. Will this be pumped in to reduce debt and any more assets that you're looking to sell?
No. There is no asset for sale except the windmill. Actually, the windmill, we had a different issue. Our requirement of power has been gradually increasing every year with ice cream, curd and all that. Our problem was April and May, there is no wind season to generate power and give it to us. So we were also not having the reserves in the month of February, March itself. So we decided to go for solar, which suits. When the requirement increases, solar power also increases with the summer. So we are shifting to solar. We are actually tying up 50 megawatts.
All right. So you're shifting to solar and hence the sale of this windmill. Got that. But on the debt front, any other plans to reduce debt from this 1,500 crores? How much do you think you can bring it down by in the next 1 to 2 years?
I think the next 2 years, my option could be it will be less than 500 crores debt. Because heavy depreciation is available, which is a cash inflow for us. And capacities are mostly built. So the debt could be in 2 years less than 500 crores in my opinion.
Sir, you said that your margins will continue to improve from here. So, going by that, you'll be moving to around 12 to 13% at least of margins that we can work with. Double-digit top-line growth and margins of 12 to 13%, 150 basis points improvement from here.
Depending on probably the future requirements, possibilities are definitely there. But I don't want to commit because we have just come out of all the turbulence and committing with the present situation is difficult. But moving forward, we are pretty likely to do it.
All right, so we leave it at that. All the best for the future and thanks a lot for joining in. So that's Hatsun Agro. Big move in trade today, 9% higher almost. And the company says they continue to target double-digit growth for FY24. And they're also looking to bring down their debt in a big way. From 1,500 crores currently, they're saying over the next 1 to 2 years, it could come down to about 500 crores. But the G20 finance ministers meet has come to a close. And my colleague Sapna Das spoke exclusively to the Economic Affairs Secretary Ajay Seth on the G20 outcome and the way forward. Listen into what he had to say.
Considering that the energy and commodity prices are off their peak, but nevertheless, inflation in major economies, especially in advanced countries, continues to be fairly elevated. So as a result, the monetary policy rates and monetary policy stance remains to be restrictive. Inflation policy rates are high, are likely to remain higher, and that creates a spillover to other sectors as well. So what kind of a policy coordination is needed among major economies on the monetary policy side? At the same time, how to take care of the spillovers. Then you ask, where does India stands? This was also taken note of. The growth rate in India continues to be robust. Continues to be highest among in the major economies, while we and inflation is within the policy band, but there is likely to be, that is more specific to us, considering that at the global level growth rate, overall growth rate, as well as the global trade volumes are going to be subdued. So that will have some impact on the margin on us as well.
All right, well, time to slip into a short break. When you come back, we'll continue our focus on Reliance Jio Financial Services as we get the rough estimate in terms of a pre-year open listing. Stay with us.
Welcome back to Bazaar Morning Call. Well, for the market at the moment, it is very quiet, really. Not too much happening at the moment, just holding on to levels from yesterday. Let's continue to put focus on the Jio Financial price discovery and its demerger from Reliance. We have two gentlemen joining in. Abhizir Devanji, the partner and national leader financial services at EVA India, and Ashwin Parekh, the managing partner at Ashwin Parekh Advisory Services. Gentlemen, morning to both of you. Abhizir, let me start with you. What is the larger implication of Jio Financial Services entry into the industry? I mean, there are a lot of discussions, a lot of narratives on whether this will be disruptive for the industry or not, but it may be too soon to take that call. Your view?
No, absolutely too soon to take that call. But Reliance as a group has been disruptive in most businesses they have entered. We've seen that in retail. We've seen that in petrochem itself. But we've also seen that now. We will possibly see that now in financial services. The one thing that they do well, and I think they will leverage that well, is on the digital part of things. And really, the world of financial services is headed more towards digital lending. And if Jio is able to leverage their existing digital information and convert that into credit information, which I think they will initially be able to do, because the Reliance ecosystem itself is so large that they will be able to start lending at that. But once they do that and thereafter focus on the larger market and build a analytics database around it, I think Jio will be a disruptor in the financial service industry. The other important thing for them to note is that they have the capital. 1,25,000 crores of capital is available, which generally NBFCs lack. So, yes.
No, I take your point. I take your point that, they have this existing digital infrastructure which they can leverage easily. And of course, they will do that, going by what they've done in the past with other businesses. But there are a lot of challenges in valuing a company that has a high net worth, but no significant book or present business, right? So they start with, of course, 1 lakh crores. But what can you what is the prognosis on how they could grow?
Oh, so at the moment, I don't think anybody should value it more than the 1 lakh crores or 1,25,000 crores that it has. There's no question. But what will happen? The market will factor in some level of, as the market looks forward, the market would value it at some level of book price, to say maybe 1.5 times book initially, and then see the first 6 months, 8 months as to how the trajectory happens. And if the trajectory is going to come about, then the multiple to book will be larger. I mean, Bajaj Finance is 8 times to 10 times book today. So if there is a trajectory felt that the digital story is playing out and is disrupting the way it is supposed to disrupt, I think there is a big play there. And the market will value it upfront. But not to the extent of a Bajaj Finance, clearly. And it should not.
Okay, all right. Abhishek, I request you to just stay with us for a bit. We have Mr. Ashwin Parekh as well, who's joining us on the show. Hi, Mr. Parekh. Good morning. Tell us, what could the implications be for the financial space with the entry of a player with a very, very good parentage?
Yes, CC, I'll tell you, I mean, there are 2 or 3 things in financial services which are distinctly different, compared to the other industries. One is, of course, the size of the balance sheet. If you're working with a very large size of balance sheet, you can aspire to become a financial conglomerate. With the exception of perhaps a banking license, you could end up doing anything. So that was one. Second is the disruption that you're talking about. Let's say there are different phases of disruption. It's not just disruption. We all agree that in financial services, cost of acquisition is perhaps the most sort of difficult to tackle for a new entrant. Now, in case of Jio, let's say what they have. They already have a huge bandwidth. So payments is something they can really work on. They have customers, so they can really work on the customers, on customer finance segment of, let's say, the financial services. They can really go into insurance eventually. So when it comes to what it can possibly do, I suppose, with a balance sheet size of that nature, I suppose they can look at all segments eventually in a span of a certain period. And they can certainly look at all services except banking, and when the regulations change, then they can even look at that. Now, let me say, in addition to the cost of, let's say, acquisition of customers, there is another important cost, and that cost is to ride over the markets, let's say, during the first 3 or 4 or 5 years. If you expand your book, and then if you find that there is an economic downturn, then it does become a little difficult. So I would say I would wait and watch. I wouldn't take a bet on how much of, let's say, the valuation would be, or I'll wait for the plans. I'll see what are the sectors in which they are getting into. What is the potential, in those areas. And when it comes to disruption, everything essential for disruption, customer base, technology, acquisition of customers, most important, trust. The brand is, it can bring about a lot of trust, which is so essential in financial services. So I would certainly believe that I would wait for the plans, to be disclosed. As in when they come out with the plans. And then some of the multiples that you talk about, in the financial services at a higher level, that is at the holding company level, they are a function of what they get into. Insurance has a certain set of, life has a certain set of multiples. Same way, lending is a different set of, payments is a different environment altogether, basically.
All right, guys, just want to get our rates. I think the pre-open is just closed. So on the BSE and the NSE, I think those are the rates. The 2589, that's 250 rupees adjusted. And on the other exchange, it's 2580. I think this is the rate that we have got on both the exchanges. So that just closed, I think, in 945 baht. And we've got the rates that come up for you on the screen. So it's a larger than expected number, right?
Yeah, larger than expected, because it was up to about, the estimates generally range from between 160 or 200. But this is, I think, the rates which are now finally starting to come through. So the session, the window to put in trades, modify trades, that ended at 9:45, and 9:45 to 9:55. The rest of the stuff will happen at the back end. But I think this is the rate now, which basically means that the discovered price, now the found price, the discovered price for the Reliance X Jio Financial is 2589. Yesterday's close was 2842. Which essentially means that Jio Financial Services will be included on the Nifty at 251 rupees per share. And the price will be fixed on the NSE and, of course, the other exchange at the rate that you're seeing, 251 and 261, 262, for the period till when the entity actually lists, Jio Financial actually lists on the exchanges at a future date. So this is how this is going to happen. Trading, you won't be able to buy and sell Jio Financial Services because it's just being included, not quoted on the indices. But Reliance will be available to buy and sell from this price, 2580, from 10 o'clock. And the change will be calculated on this base price, not yesterday's closing price, but the price that you're seeing on Reliance right now will be the base price. And if it opens up, it'll be calculated. The base will be 2589 on one exchange and around about there on the other exchange as well. Slight difference there on both the NSE and the BSE. But this is what is coming through in terms of this price discovery that we are getting at this point in time. Gentlemen, good morning. Mr. Parekh, if I can come to you. Just in terms of thinking about what Reliance will do with the financial services entity, I guess we'll hear more about it in the AGM as well, which is not very far away now. But they're not a group which does things at a small scale, right? Telecom is a recent example. As an advisor, if you were to let your thoughts run a little while, not too wild, what should we expect really? Should we expect some M&A, some acquisitions, especially in spaces like insurance, where there are companies where perhaps those opportunities exist? What else? Lending, of course, is the big money-making part of it. Go on.
So, yes, so with the balance sheet size of that, your question is so pertinent, so relevant. You see, what would you really want to do? Would you like to really build, things by pieces, or would you like to run as soon as you land? If you want to run as soon as you land, then I suppose acquisitions will make sense. There are enough number of, let's say, opportunities available in general health, even in mutual fund, in AMC sort of, industry. So there are those pieces available. And then as far as, let's say, the other areas are concerned, let's say for payments or acquisition of fintechs, basically, and also becoming a substantially large fintech itself, should not be a big sort of, challenge for. So I would certainly expect in the span of next 1 year, a certain order of acquisition, M&A activity, and a certain number of. The only thing they would do is, I suppose, not only will they acquire, but they will allow the management of that organization to run it for a certain period with the Jio characteristics. So that could make it a more interesting place.
Okay, that's interesting. And they have put a very strong management in place as well, right, for JFS. But Abizar, I wanted you to come in on this because as Mr. Parekh was also pointing out, they have all the ingredients for success, right? Whether it's the customer base, whether it's technology, whether it's digital infrastructure. But an analyst earlier was pointing out that they will have to go through that grind in terms of a timeline because there are well-entrenched players, not just Bajaj Finance, but others as well in this space. So it may take them at least 2 to 3 years to sort of put a proper business model in place. What are you looking at in terms of a timeline, despite all that they have currently?
Oh, I absolutely agree with you. See, for one, they have the capital. And capital, as everybody else knows, can be wasted quite easily in financial services. So I don't think one should be wasting capital immediately. They have 2 or 3 things to do. First is, look at the Reliance ecosystem per se. The whole bunch of suppliers who are MSMEs who are sitting at the Reliance level, where they can easily give them credit because they've been experiencing them for the last many years. The second is the whole retail proposition with Reliance Retail around to offer consumer credit. The third is to actually look at payments. And I mean payments is the much larger investment space, because when you start doing payments, you start collecting characteristics of people which talk about how they behave in terms of payments. And when you capture those, you actually will convert a lot of payments data to credit data. And I think if they do a 3-year or 4-year systematic data collection process, which enables them on a focused way to convert data into credit data, I think at the end of 3 years, they will be ready for the market at large. And it's the payment vehicle which will enable them, whether it's the payment bank or the aggregator, will enable them to actually build a larger customer base, which is more credit-worthy. Insurance will be a cross-sell product for them, clearly, whether they manufacture or whether they broker. But at least I think the wise way would be to start with something that you're familiar with. Once you gain scale over a period of 1 to 3 years internally, go external. And at that point in time, possibly also look at acquisitions. Acquisitions has to be a means to an end. It can't be an end in itself. And I think that's what the group realizes very well. So I don't think they need advice from people like us. But that's, I think, what they...
That's very modest of you, Abizar. Thank you very much for joining us. Mr. Parekh, great to have you with us here. And we'll sort of lean on you for more in terms of insights, in terms of what you make out of the journey here with regards to Jio Financial Services. The capital market journey in some sense is, the journey's already started and the process is underway in terms of Reliance building out this financial services entity. Now, for our viewers, at 10 o'clock, you'll be able to trade Reliance Industries x Jio Financial Services. So remember that. And the base price, as we've been saying, is 25.80. There you go. That's the change, which is coming up on your screen. And, the difference between 25.80 and 26.42, which was yesterday's price, is basically the value for 28.42, beg your pardon, is the value for Jio Financial Services, which will be included but not quoted, will not be tradable on the indices starting 10 o'clock. The F&O contracts for Reliance Industries will also start trading at 10. So just a bunch of things to keep in mind, all of this coming through in the next 5 or 6 minutes of trade. Okay, Canfin Homes is the next company that we are talking to on the back of earnings which came through for the first quarter. They witnessed a seasonal hiccup in asset quality but managed to arrest declining net interest margin trend. Assets under management growth is also come in at what is basically a 7-quarter low. To discuss more on their performance, we have Suresh Srinivasan Iyer, Managing Director and CEO at Canfin Homes. Mr. Iyer, good morning. Good to have you with us here. Thank you very much for your time. If I can begin by asking you, your sanctions growth has basically outpaced what you've disbursed in the quarter. Could you tell us what is the reason behind this and how do you see both of these trending from here on?
We have actually had a steady sanctions, but disbursements, because we have some, issues in the disbursement, this keeps happening in the normal sub-registrar offices and also some delays keep happening. So last minute, delays can happen. But it has been in line with the expectations, and the growth that we had targeted about 15%, which we had given as a guidance, is what we have sticking to. So we've had a 2,000 crore target that we had set for the quarter. We are just about there in terms of the disbursement.
Okay, so 15% growth in disbursements is what you're looking at. Mr. Srinivasan, good morning. On the AUM side, you know, your AUM growth has been strong for the last many quarters, but this quarter it's come in at 18%, slightly short of the 20% that you're used to for the last many, the preceding quarters. Can you tell us what led to that slight hiccup in terms of AUM growth, and what is the target by the end of the year?
So last year also we had 18% growth in AUM, and we had also projected or given a guidance that we'll have an 18 to 20% growth in AUM. So we are in line with the AUM target of 18 between the 18 to 20% range that we have spoken about. And as you know, the first half of the year is a little subdued compared to the second half. So the pickup will happen in the second half. But yeah, our guidance is 18 to 20% in terms of the AUM growth.
All right. Hi, Mr. Iyer. Good morning. This is Nigel on this side. A couple of questions with regard to this 18 to 20% growth. How many branches are you looking to open for this year? I think it was 10 or 15 odd. And do you think that will cut it to get this 18 to 20% growth? Or are you looking at an increase in the ticket size?
Well, we have targeted 15 branches to be opened in this year. And we are on course for that during the year. We've already identified a few branches. So this quarter, we should start seeing the branch openings happening. And in terms of the growth of 18-20%, we are already having this 18 to 20% growth. These branches normally take about a year and a half to start, delivering and reaching the kind of peak business that they normally start achieving. So the benefit of these branch openings that we are doing will come in the following years or in the second half of the year. And as regards the ticket size, yes, we are looking at a slight pickup in ticket size. Although this year it has been almost the same or almost, I would say, a little less at 22 lakhs for this quarter, whereas in the last year we had around 24 lakhs as the average ticket size. But that's more of a blip rather than anything else. That's nothing directional or intentional in that sense.
So it can increase to what level? From this 22, it's fallen from 24, 25 to 22. You're saying it could increase a little bit. What could it be?
Yeah, it could be a little more than 25 by the end of the year.
Okay.
Right. Could you talk to us a little bit about the various customer segments and where you're seeing more traction? How's the self-employed customer segment doing for you?
Well, we've not seen much of a change in terms of our, segment or the customer mix. We still have a sizable amount coming from the salaried segment only, but there's been a marginal, pickup from the self-employed segment. But that's more a normal fluctuation that is happening. Nothing major, not even a percentage point that has changed in that sense. So that's the.
Okay. Your ROAs, I just was looking at that. It's a little lower than what we saw same time last year and last quarter. It has been trending lower despite your margins improving. Can you tell us both on NIMs and on ROAs, what is the expectation?
Well, actually, compared to what it was on March, there's been a slight improvement. But yes, compared to the last June quarter, it's definitely what we had presented in June 2022. It's lower because the last year we had the impact of the rate increase, because of which our margins were squeezed during the year. On the asset side, we have an annual reset, whereas on the liability side, all our liabilities get repriced much faster. So because of that, during the entire year last year, when the rates were going up, we had a lagged effect on the asset side, because of which our NIMs and this were coming down. But now we have, now that the rates have stabilized, we have started the improvement or the effect getting seen on the asset side as well. That's why the NIMs on a sequential basis have improved during this quarter.
Yeah, Mr. Iyer, we're just a little short on time. We just wanted to understand, going ahead, these NIMs which have improved, and we have the chart up for you on the screen, it's improved after a few quarters at around 3.5%. Can you hold on to these NIMs? And also ROA, I think earlier you were targeting around 2.2%, right, by the end of this year.
That is correct.
Maintain that?
Correct. Yeah, that is fine. And in fact, we should be able to maintain these NIMs going forward as well.
Okay, well, we'll leave it there. Thanks very much, Mr. Iyer. Appreciate you joining us with that outlook for the business as you see it. Well, we're down 60 points and it's 10 o'clock, which means that we should be starting to get the first rates on Reliance Industries. Yeah, we are getting. Let's have Reliance up, please. There you go. So 2606, 25 rupees higher is the price which is coming through. As we were saying, this is calculated, and immediately there is a pickup on the Nifty, of course, as Reliance starts to kick in. We were down 60 points, I think, 60, 62 points. We are down just under 50 points now on the Nifty as Reliance starts to trade. Jio Financial Services. Look at the volumes in this one picking up. On the left-hand side of your screen is NSE. On the right side, I think, is BSE. And rates are coming up at with a slight uptick, 1% uptick. So Jio Financial Services will stay where it is at the price, and Reliance Industries will now trade based on what the markets want to give it as a value Jio Financial Services, which is demerged. So 40 points lower on the Nifty. There is certainly a lift which is coming through as far as the index is concerned. 26. Let's refresh this. I think prices are a little higher. The Reliance price in my screen is about 26.10. Yeah, at the bottom of the screen, that's the one. 26.08. So moving up a little bit, 1.25% higher on top of the price. Mitesh is with us with a quick check on things. Mitesh, hi, good morning. Quite an eventful day with this pre-open on Reliance, and of course all that has happened. What's your sense on the index? Would you buy this dip that we have in our hands, which is getting smaller with the push coming in from RIL now? And in terms of stocks, what would you trade?
We haven't done that. I think, still trying to understand how this RIL adjustment will work out. But I think so. If you're not very clear, I think the good choice is to be on the stocks and look, where action can be happening. And I've identified a few trading calls here. On my list today is Voltas, which I would recommend buying with the stop just below levels of 770 for targets of around 805. And then also is Concord, a container corporation, which is a buy with a stop just below levels of 684 for targets of 715.
Okay, Voltas and Concord, thanks a lot for that. Well, the Jio price has settled at around 262 rupees, which was largely in line with what the grey market premium was. So no real difference compared to what the street was expecting, largely in line with expectations. Jio Financial price at about 262 rupees. Let's do one thing. Let's take a quick break on that note. Thanks a lot, Mitesh, for joining in. Virendra Jeet, who is the CEO of Newgen Software, will join in on the other side to discuss their first quarter earnings. Stay tuned.
Welcome back. Well, we have been focusing on the large cap names, but from the mid cap universe, Newgen Software, that stock is surging in trade after reporting a very, very good set of numbers in the first quarter. In fact, the company is up nearly around 100% in the last 1 year. Their revenue surged close to around 34%. Margins also expanded. The company has been relatively unaffected by the US banking crisis, as more than 60% of their revenues coming from India, as well as Europe and Middle East and Africa. To discuss more about the past quarter and to find out what's the way ahead, we're joined by Mr. Virendra Jeet, the CEO of the company. Hi, Mr. Jeet. Good morning. Thanks so much for joining in. Well, congratulations on a super showing in the past year, in the past quarter, that is quarter one. You've grown by more than 30%. Now, normally you say that you've grown by close to around 20% on a year-to-year basis. Can you do better this year? Can you grow by more than 25% that you grew in FY23?
Good morning, Nigel, and thank you for having me on the show. You're absolutely right. I think this quarter has been pretty strong, and it has been strong on accounts of all markets performing. We had a strong growth in markets like India, Middle East. In fact, even the US was strong for us this quarter. This was predominantly on account of, one is the broad-based growth, and the second is, the license revenue this quarter was very strong. As you know, the business is a bit seasonal, and the Q1 is generally lean on licenses, but this time we had very strong license show. So it has strong performance of roughly around 30% growth. Traditionally we have grown at 20%. You're absolutely right, and I think we have been over years trying to push this growth rate because the addressable market for us is quite wide. And with our foray and investments in mature markets, we are trying to push that growth rate. We are keen to push that high. How high that's going to be right now and this year is still too early. But I do think that we can do a strong Q2 as well, and then Q3, Q4 we'll have to look at how the market unfolds. But absolutely right. We want to push the growth rates much higher than 20%, which is our traditional growth rate.
Okay, so when you say push the growth rate much higher, is it possible to beat that 25% growth rate that you've seen in one of the earlier years? I mean, do you think that is a possibility in either FY24 or 25?
So I think what we have done last year, we did around 24% growth. And I think we were, in our planning, we were thinking that we should be able to meet the growth rates what we did last year. But, it's too early and we cannot predict it because, a lot of, what's happened, since the bases are very small, when you break the revenue on quarter basis, few deals can make a lot of differences. So we should be cautious not to take them trends of, the whole year. We will be having a strong year, but how strong, I think we'll have to wait and see how the Q3.
Sure. The reason I ask is because earlier you had said that you're aggressively looking at some opportunities both on the organic and on the inorganic side. Do you think there's something that could fructify on the inorganic side in this year, in the next 12 to 18 months, which could help you with that growth target?
So 12 to 18 months, it's quite possible. Right now, we don't have anything on the table to consider very seriously, but we are actively pursuing this. And the idea is to accelerate the mature market penetration for that. And those are the territories where we're looking at some inorganic. But I think we're more excited also on the organic front. The digital lending is doing very well. Our new products in trade are really making good inroads. India ecosystem of banking, our existing accounts are really growing in terms of the growth in credit and the lending initiatives is done by all these banks. So I think our traditional businesses are very strong, but to increase the penetration of mature markets and to speed up our go-to-market out there, that's where the inorganic may help, and we are looking at opportunities out there.
Okay, all right. Looking for some concrete numbers, Mr. Jeet. Your DSO days, that's gone up to 126. On a year-on-year basis, it compares with early hundreds. Could you tell us what's the trajectory from year on? What's the number we should look at? And also margins. The last time you joined us, you told us you're looking at around 22%. Do you want to up that a little bit?
So on the DSO front, what is happening, on a historical trend, we have a lot of revenue billing has happened in Q4 last year and Q1 this year, which has been substantially much larger than the revenue which we have accumulated. So there is some amount of provisioning done even for 90 days. So that's what has pushed. But as I told you, I think long term, in next 1 to 1.5 years, we should bring it around 100 days on average. That's our goal. On the margin front, what we have said that we should be able to do around 21% of EBITDA, and I think somewhere around between 17-18% of PAT. Now it completely depends on how larger the top line we hit because the costs are pretty linear. But having said that, there is also a need to invest for growth. And I think our whole purpose of, the organization is to make it a very large software company and have established our brand as one of the leaders in products across the world. So we are aggressively looking at opportunities of investing in our R&D, expanding our sales and marketing costs. So, but yes, giving overall our broad goals is to maintain a EBITDA and PAT in the ranges we have controlled. But you're absolutely right. In some years, if the top line grows, but the costs cannot go in the same year at the same level. So there will be some amount of organic expansion of margins.
Just very quickly, if you can tell us, the subscription revenues contributes over 30% to your business. Do you plan to take that higher?
So on an annual basis, our what you call annuity and subscriptions have now annuity revenues have gone up to almost 55, 56. Of course, Q1 they will look much larger because of the overall quarter is smaller. As we are selling more and more software licenses, the nature of business is that the annuity keeps on getting compounded. So our aim is that in next 2-3 years, our subscription should reach around 70-75% of the business. And in that, annuity should reach around 40% of our business. So that's what our focus of business and sales is.
All right, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts. That's Newgen Software. Let's slip into a quick break. On the other side, Sumant Katpalia, the MD and CEO of IndusInd Bank, will join in to discuss their numbers.
Welcome back. IndusInd Bank's first quarter numbers are picture perfect. Loan growth at over 21%, best in 4 years. Margins at 4.29. Well, Abhishek tells me it's the best in 8 years, but that's because we don't have data beyond it. It's probably an all-time high. I have with me Sumant Katfalia, Managing Director and CEO of IndusInd Bank. Sumant, good morning, and thank you very much for sparing time for us.
Good morning.
This is a journalist's nightmare because we like to ask tough questions, but it's really tough to see anything difficult over here. So first, the plain vanilla question, 21% is a very good loan growth. Is this a maintainable pace? Are you seeing enough demand on the ground?
So we do see enough demand specifically in our domains. So if you look at our growth, our vehicle finance unit came in at a very good growth of 21% year on year. I think our microfinance came in at 14%. Our other retail came in at 27%, driven by unsecured as well as merchant acquiring business, which has done very well. And of course, our corporate bank, specifically in the SME and the MSME side, gave a 10% quarter-on-quarter growth. So I think this was broad-based. We believe it's sustainable because we play in those businesses where we have a right to win, and we believe that that's going to drive the growth as we move forward.
Okay. Among the businesses you are best known for is vehicle financing. One almost looks at it almost synonymous with IndusInd. Now, when we spoke to the CV guys, and even when you look at the May and May-June numbers that were announced, there is clearly a downturn, a slowdown, I won't say downturn, slowdown in CV sales. In PVs, compact cars have done actually badly. Only SUVs have done well. And two-wheelers, we all know that everyone's rushing to the 400cc plus because the lower segments are doing badly. So is it going to be a fight there to be able to produce a 20%, 21% loan growth?
So what you will see, we are well diversified in our vehicle finance portfolio. We have 6 categories of vehicles where we play in, and CVs is one of them. You're absolutely right. I think the growth will be tapered to around 8 to 10% this year. And I think if you look at, and that's on the volume side, but if you look at the price variance, that will be another 8 to 9%. And if you're gaining market share, so we're very confident that we will maintain our growth rate at that level because of the price variance, the volume variance, and the gain in market share, all playing together.
I take your point on price variance because even Maruti is telling us SUVs are doing well. The high-priced ones, premiumization is the name of the game. So yes, I take your point on that. But speaking of claiming market share, we now have a behemoth in HDFC Bank, which is going to aggressively look for deposits. Of course, this quarter they didn't because they had overdone in Q4. But, they have to replace the HDFC maturing liabilities and want to grow their own, 20 lakh crore balance sheet with alacrity. So costs will go up. You think this is the best you can do in margins? Does it get better than 4.29?
So we've always said our margins will be range bound between 4.2 to 4.3. That's been our direction to the market, and I think we believe that that's the right margin in which we will play in. Of course, our cost of deposits are high, and we believe that the cost of deposits will start coming down in Q1 of next year, and you will start seeing the decline in the cost of deposits as we move forward.
Yeah, but that's provided HDFC Bank allows, isn't it? That's something which bankers keep mentioning, keep whispering.
Lata, there has always been competition.
Right.
Every bank will have their own unique strategies to garner deposits. If you think that we copy the big banks, I think our cost to income ratios will fall flat. So we have to do things differently. And if you would look at our affluent business, the NRI business, I think we are gaining market share. Our home markets, we've gained market share. So we play in different markets, we play in different segments and gain market share on those segments.
Okay. No, fair enough. It's just that, because it's a big player, second largest bank, it has an impact on the industry itself, which is what bankers worry about. The other point is, can you tell me what is your fixed to floating loan percentage? How much of the loan is floating?
So 48% of our book is floating and 52% of our book is fixed.
Okay. Now, in a context where Reserve Bank rate hikes have peaked, this might work to a disadvantage in terms of you not being able to price your loans higher and therefore a pressure on margins?
See, I've been hearing this discussion on pressure on margins for the last 6 quarters. And if you go back and see our margins, it's been very consistent between 4.25 to 4. The beauty about our book is it's self-balancing. And now the retail book, if the cost of deposits go down, the retail book will start giving higher margins because we book the loans at a higher yield at this point of time on the fixed rate book.
Okay.
And that will start playing out.
Yeah, your 52% will certainly come to your help of fixed rate loans. Sumant, yes. There have been repeated warnings from the Reserve Bank on unsecured loan book. And just recently, there was a CRISIL press release, CIBIL press release, which was indicating some pressure with credit card loans. Of course, this is a dated report. It dates to the period ending March 31. But still, if the trend has continued, there is a problem with unsecured loans, and Reserve Bank is sent out those letters to NBFCs and banks. Do you think that we should worry about what is growing very well for you, unsecured loans?
It's look at the business. While the percentage growth may be higher, the unsecured, which is non-MFI book, is only 5% of our book, which is credit cards and PL combined. So we've always been static on that growth. Of course, we are 4.2% and we've gone to 4.8 or 5%, but that's where it will be. So we have always been consistent in our commentary that because we have an MFI book, which is at least 12 to 13% of our book, our unsecured businesses other than MFI will be 5% of our book, and that's where we are on this book. So we don't have such a big exposure on cards and PL as what the market seems to be, because we are not growing that book very rapidly. When you see a percentage growth, it is coming from a very small base, and that's why you see the percentage growth.
Okay. How are you looking at the year ahead, the next 3 quarters? What are likely to be the growth levers for you? And for that matter, even profit levers?
So I think there are 3 levers which will drive our growth. One is, of course, the loan growth, and we've always said our loan growth will be in the range of 18 to 23%. Our domains are coming from cyclical lows, and we believe our domains will continue to give us growth. We've not grown our microfinance book last quarter, and you will see that growth coming back this quarter. New additions of products which we've added will also give us growth, like merchant acquiring business, mortgage business, and I think you will start seeing that growth. Number 2, I think our cost of deposits will start tapering down. I think from Q3 onwards, you will start seeing a smaller decline in the cost of deposit, but by Q4 of this financial year, you will start seeing, and that will start increasing the margin. And the rest we've said is our credit cost will be between 110 to 130 basis points. So we still have a way to go. We are at 132. We should be at 110 to 130. And of course, the operating leverage, which is the cost to income ratio, will settle down at 45% for this year against 45.6 which we provide. So if you look at it, we're heading towards a 2% ROA business, and those are the levers which will play for us.
Yeah, and you are carrying a contingency buffer as well. So I guess there is still some elbow room for a lower credit cost. Sumant, this is more an industry question as a bank, as a veteran in the sector. Do you see major disruption because of Jio Finance on the one hand? It's coming possibly with a 5 lakh crore ability to lend, a 1 lakh crore net worth. I mean, all this is just looking at the kind of capital they have. Is that likely to be disruptive and, push down the rates, undercutting possible?
So competition is always healthy. It depends on which segments you are playing. I've always said lending business is not a prepaid business, it's a postpaid business. You have to collect what you lend. So I think every lender has understood that while it is easy to grow the book, the balancing of the portfolio and the quality of the portfolio is what sustains the business.
Sumant, I'm really sorry I have to I'm sorry I have to interrupt you.
Yeah.
The Prime Minister is speaking ahead of the monsoon session.
और इसलिए सावन की अवधि भी जरा ज्यादा है और सावन मास पवित्र संकल्प के लिए, पवित्र कार्यों के लिए बहुत ही उत्तम माना जाता है। और जब लोकतंत्र के मंदिर में इस सावन के पवित्र मास में मिल रहे हैं तो ये लोकतंत्र का मंदिर ऐसे अनेक पवित्र कार्य करने के लिए इससे बड़ा उत्तम अवसर नहीं हो सकता है। इससे बड़ा उत्तम अवसर नहीं हो सकता है। मुझे विश्वास है कि सभी माननीय सांसद मिलकर के इस सत्र का जनहित में सर्वाधिक उपयोग करेंगे। संसद की जो जिम्मेवारी है और संसद में हर सांसद की जो जिम्मेवारी है, ऐसे अनेक कानूनों का बनाना, उसकी विस्तार से चर्चा करना बहुत ही आवश्यक है। और चर्चा जितनी ज्यादा होती है, चर्चा जितनी ज्यादा पैनी होती है, उतना जनहित में दूरगामी परिणाम देने वाले अच्छे निर्णय होते हैं। सदन में जो माननीय सांसद आते हैं वो धरती से जुड़े हुए होते हैं, जनता के दुख दर्द को समझने वाले होते हैं। और इसलिए जब चर्चा होती है तो उनकी तरफ से जो विचार आते हैं वो जड़ों से जुड़े हुए विचार आते हैं। और इसलिए चर्चा तो समृद्ध होती है, निर्णय भी सशक्त होते हैं, परिणामकारी होते हैं। और इसलिए मैं सभी राजनीतिक दलों को, सभी माननीय सांसदों को इस सत्र का भरपूर उपयोग करके जनहित के कामों को हम आगे बढ़ाएं। ये सत्र अनेक रूप से महत्व का भी है, क्योंकि इस सत्र में जो बिल लाए जा रहे हैं वो सीधे सीधे जनता के हितों से जुड़े हुए हैं। हमारी युवा पीढ़ी जो पूरी तरह डिजिटल वर्ल्ड के साथ एक प्रकार से नेतृत्व कर रही है, उस समय डेटा प्रोटेक्शन बिल देश के हर नागरिक को